Okay, this video is on Tasr International, and I really like these guys a lot. Towards early of 2014, I was a huge believer in this thing, and it really got some legs here and ran up really nice. I played this a couple of times through here, and then kind of got taken out one time here on some I tried to get some long position here around 27, didn't hold. And then I kind of didn't look back for a while. So now it's been some time, and it's time to kind of look over the trade. It had this last flush down through here from 16 to around 14, which was this huge area right through here. So I'm going to kind of put that up as just to see. This was kind of a real big deal back here. And it actually held up for some weeks, and then it got this run. Well, now we're looking at this right exactly stalled at the 200-day moving average, and you can see with the market being up, up real nice today, 212 points today. This didn't do anything. It just hit and stalled, and that's kind of what you expect right here at this 200-day moving average. So what I'm actually doing now is I'm looking to see there's been some positive movement on the weekly, on the wave count. There's been some positive on the MACD. We're above the zero line. We've got a couple of green ticks here. And we're almost flirting with 40 on the RSI, which is a positive sign. We're still at 39. We've got their earnings coming across. The only thing is their earnings in 4 days on the 29th. I don't know that I would play that for the earnings call. I think it could be a little bit risky at this point. I'm going to do some more work on that and kind of look into it. If you do decide to get long this before the earnings, just do it in a a half or even a quarter position, and then that way, if it kind of pulls down some, you can actually add to your overall cost basis and then go from there. Or if you decide you don't like it and you want to just get away from it, you've put yourself at minimal risk. What I want to actually do is I'm going to do some more work and find out about what possibly could be something with the earnings. But I'm going to put an alert in above here. I want to do it at 1750. And if we can break 1750 and kind of get into this area just under 18, maybe I'll take a stab at it a little bit pre-earnings with a quarter position or a half. But I think that this is seen some of the worst days behind it for a while. They have a good product. They have good contracts for the product. They have, I think they have good growth. And down here, this is really an opportunity to see if they can continue off and have a really good 2016, which is what I'm hoping for here. So just one that isn't actually a trade as of yet, but just kind of wanted to throw that out there so you could look at it. This hit my alert because it was just barely just a tick above the 200-day moving average and kind of stalled out. But I think again, this has really been hit really hard. The stock has been cut in half, and I think risk to reward, even a nice little bounce, could get you back in here to around 20 or so. And let's look at the options quick and see what we have. Let's go to March, and yep, you've got some nice calls in here. Not a whole lot on the put side. Like I said, you have a few people in here, but it's been hit so hard that any kind of news being decent on it's going to run it to the upside. So the 17.5 is almost there now in the money. So this isn't too bad. I mean, it's got a 15-cent spread. You might be able to get in for half of that, $1.07, $1.09, something like that at a midpoint. I wouldn't go too far out with the days. This one here is not too bad, but still the same thing. You might be able to get a fill for 85 or 90 cents. But that's what I would be looking at as those two. And see how this plays out, but I think this is something you should definitely keep your eye on, and it definitely has a potential to finally break out and get moving. So check this one out, see what you think, and good luck to you on that.